In this week's analysis, we'll be taking a look at gold, crude oil, USD-JPY, and the DXY. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you haven't downloaded our chart pattern playbook yet, I highly suggest you do if you're interested in learning to trade trends as I do. So just learn one of the techniques I use in trading trends. So bullish trend and bearish trend. I use chart patterns. This playbook is going to show you exactly my top 3 chart patterns in which I use to trade trends. You see this movement on gold over the last few months. Chart patterns made me a lot of profits from this trend, right? And that book is going to help you understand my thought process trading that. If you're interested, use the link in the description below to get that book. It's totally free. Just put in your email and I email the book to you, right? So moving on, we're going to be talking about gold, as I said earlier. So gold, massive bullish trend. Right now, we seem to be consolidating around this price level, but the immediate trend seems to be bearish, right? We have price creating higher, lower highs, lower lows, excuse me, and we have a very big consolidation over here, which looks like an ascending triangle, right? But remember, if you've gone through the book, ascending triangles doesn't mean price is going to break to the upside, right? So the confirmation comes from the direction of the breakout. So if we get a huge breakout to the upside, then by all means we go long. If we get a confirmation to the downside, then we go short. That's how chart patterns works in general, right? So the reason why I will be considering going long because we are still in a macro bullish trend, right? So price is still bullish in the sense that if you zoom out, you'll see all the way up here. I'm just looking at the market structure, higher highs, higher lows. This low is still higher than this one or this one or this one, right? But for the short term, this is a bearish trend. So that's why the breakout of this chart pattern is going to be a significant, decider as to where price is going to head next. So if you went through the chart pattern playbook, I think you understand what I'm talking about right now. So gold setup, I'll be watching out for a bullish breakout from this area of resistance before I go long, probably followed by a retest, because this consolidation has drained a lot of traders out of the market, right? But I've decided to stay away. If you follow us on Discord, I stayed away, watching the market patiently to see what happens before I decide to go long. So if we get a breakout from this area of resistance, I'm going to go long, aiming for this area of resistance over your area of value, possibly a consolidation and another move to the upside if we do get a bullish breakout to the upside above this area of resistance. So this is first take profit target. Second one is going to be around this area of resistance where we have our double top. So this is my bullish case scenario for for gold, right? So it's a no-brainer, simple, straight to the point. We get a good breakout on a retest, I go long, but I may not wait for your retest, right? I may decide to go aggressively. It's just my trading style. The point is I use a very strict risk management, usually 1 to 2% of my account. So even if I go aggressively, it's not going to hurt me, and I know I have enough juice to take on more trade opportunities if those opportunities present themselves, right? So I may go aggressively, immediately we break out sustainable high volume candle close above this area of resistance, and I aim for this price level as my first target, wait for a consolidation, possibly another breakout, and then move to the upside. So if we get another breakout from this area of resistance, I'm going to go in again, adding to my positions. But meanwhile, as we go higher, I'm going to scale out my positions, right? So that's a bearish case scenario. For a short case scenario, I know it's pretty straightforward. All we have to do is wait patiently for a move to the downside, hitting this trend line, consolidate, followed by a bearish breakout. Bearish breakout like this, all the way down. Entry is going to be after the breakout. Stop loss is going to be above the consolidation list of breakout. Remember, we always wait for these consolidations so we can get tighter risk to reward ratio, right? So for a bullish case scenario, I didn't talk about my stop loss. So for a bullish case scenario, my stop loss is going to be placed around these lows, right? So around these lows, if market opens and we get an immediate bullish breakout, for example, then my stop loss is going to be underneath these lows, while my breakout trade is going to be around here. So that's why I'm going to be trading with very strict risk management. Meanwhile, I don't want to rush or jump into taking any trade as long as we are within this triangle, right? The market hasn't decided yet. There's no assuming. Don't make any assumptions that market is going to go in a certain direction, because this is a clearly defined area of consolidation and price could go to either direction, right? So if we get a good breakout from these lows, I'm going to go short. Take profit targets for a short position will be around these price levels. and possibly these price levels, right? So first one over here, second one over here, and we see what happens as the price evolves. So something else to pay attention to will be pulling up the moving average. So if I have the moving average on the 4 hours time frame, you can see we're still trading around that moving average. So that's the reason why my bullish thesis, I'm a little bit more bullish than bearish, but it doesn't guarantee anything. Just moving averages doesn't guarantee anything. And since we've been trading around this range, tight range, it's best to wait for breakouts as our confirmations to go long or short, right? So if we do get a bullish breakout, then this 4 hours moving average would have been very good support, right? Though we've breached it a couple of times. So if we get a bearish breakout, then I think the moving average on the 6 hours time frame may act as a support. So on the 6 hours time frame, you can see how closely aligned these moving averages are currently converging towards the area of support, so where we had this first bounce. So if we get a breakout from this trend line to the downside, so this is a very important level to pay attention to, because it may act as another support for a bounce before we really go up or possibly consolidate or go lower. So that's it briefly for this week's setup on gold. Moving on, taking a brief look at crude oil. So crude oil time frame on a 1 hour, you can see we have a very nice descending channel, right? So I know you want to call this a bullish flag. This is not necessarily a bullish flag, it's just a channel, right? A consolidation to the downside, right? Because the consolidation has taken out at least half of this movement to the upside, so I wouldn't consider this a flag, right? So at the moment, two things are likely going to happen. There's no clear price levels to go short right now, because markets could just continue going choppy, excuse me. So it could just chop sideways like this, go like this, like a pausing device, right? So it could just go like this all the way down to this support level and bounce or break to the lower side. So when price starts moving like this, then it's best to stay away, because there's no telling when a breakout is going to happen, either to the downside or to the upside, right? And it's extremely difficult to pick an entry. So the best place to enter this trade would have been this trend line here, right, followed by a breakout. But since that's not happening at the moment, I think crude oil here, we're likely going to stay away. But just for a bullish case scenario, for those who are curious, your bullish case scenario, you want to wait for price to consolidate, maybe hit this higher bound of the channel, for example, consolidate a little, then give you a good bullish breakout, right? A bullish breakout, retest, possibly, because crude oil needs more patience, unlike gold and the rest. So this would be a good opportunity to go long, right? But there's one more thing to watch out for. So if you pull up the moving average, I use the 200 EMA and the 200 SMA, you can see they are currently acting as an area of resistance. So they're acting as a resistance right now within this channel. So I'm just going to zoom in a bit so you can see what I'm talking about. So if you zoom in like this, yeah, so you notice that the moving average at the moment is acting as some sort of resistance. And if you pull up a range, you can see we have some sort of a resistance level which aligns nicely with the moving average. So if you're waiting for that bullish breakout to go long, so let's say we get a consolidation over here down and we get our bullish breakout, we have to make sure the breakout also takes out these moving averages, right? Because if you have a breakout and it's still within the range of the moving average, then it could just be a retest or a fake out and we see price rejection. So if we have a good breakout from this descending channel and price sustainably trades above the moving average, then it could be an opportunity to go long. So another thing to watch out for is we have multiple areas of values that could potentially prevent price from going higher, right? So your first take profit target obviously has to be around this area of value. So this one over here should be your first take profit target. Second take profit target will be around this area of resistance, and here you have it, right? So but don't go into a bullish trade scenario just totally locking out this one and assuming price is going to go all the way up to this area of resistance. Even though it will, or it might, excuse me, it's good to prepare for the worst case scenario, which means price could hit this area of value, area of resistance, and reverse back down in continuation of the trend. Because mind you, this is still a very solid bearish trend on crude oil, and the market structure shows us that, right? Area of resistance, now price grinding downwards. So if you do get a bullish breakout to the upside, pay attention to these levels, area values, and watch out for these levels to take profit. That's it briefly for my analysis on crude oil at the moment. All I see is an opportunity to go long if we take out this channel and this moving average. But for now, the bearish case scenario isn't clear enough. But let's see. I don't want to force any setup here, but if you have something like this and you get a solid consolidation around this price level, let's say something like this, then we get a good breakout, then this could be an opportunity for you to go short, aiming for the lower bounds of the channel, right? So the reason why I say this is because you can see what happened here in the past. I'm just going to take out this moving average, for example, just to remove this for now. So you can see, so similar to what we had over here, so a consolidation, hitting the higher band of the channel, good breakout to the downside, you go short. So if something like that happens again over here, then that could give you an opportunity to go short on a breakout from this trend line. Stop loss can be placed above the consolidation on the highs, which will be above the higher bounds of the channel, and you can trail your positions as you go lower, aiming for the lower bounds of the channel. So that's going to be my bearish case scenario for crude oil. Meanwhile, remember, the trend is still bearish. If we get the opportunity to be on a good opportunity to go short, and if we get a breakout from this channel, watch out for those moving averages for a clear chance to go higher. That's it briefly for crude oil. Moving on, we're talking about USD-JPY. So USD-JPY, a very controversial one. I'm going to remove my moving average for now. On the daily, I'm just going to go to the daily time frame first, so we see where we're at. So on the daily time frame, you can see strong consolidation over here after a massive bullish move. So this pattern looks like a very solid bullish continuation pattern, right? But there's no confirmation yet until we break out from this pattern going higher, and a breakout from this pattern to the upside will give us a bullish confirmation, right? So going to the lower time frame. So now that we know what the structure looks like on the higher time frame, what we're watching out for to go long would be a breakout from this area of resistance. So we have a mini resistance over here. So I'm just going to zoom in a little so it's clearly visible. So we have a mini resistance over here, and a breakout from this resistance would signify a potential bullish move. So a move to the upside, consolidation over here, and a breakout. So this will be our confirmation to go long, in line with what we have in on the one day time frame, right? So if this happens, you want to go long here after we take out this area of resistance. So SL can be underneath the consolidation, and you just trail your positions as we go higher. So this is going to be my bullish case scenario for the USD-JPY. So I'm going to show you something interesting at the end of this video, which is the DXY. But for now, this is going to be my bullish case scenario for the USD-JPY, and for a bearish case scenario, which kind of seems more likely at the moment, would be waiting to see how price reacts around the current price levels, right? So right now, if you take a look, we have a good area of value here. So this trend line, 1, 2, 3, 4. So about 4 bounces of this area of value. Now we seem to have a breach and a consolidation retesting that same trend line. So to go short, you want to watch out for more consolidation, right? Followed by a bearish breakout as confirmation of a dump. If this happens, then you have something like this, right? You have something like this, and then you can go short after the breakout. So if you go short after the breakout, your stop loss can be placed around these highs, above the consolidation, this is the breakout. First take profit target can be around these lows. Second one can be around these lows. Third one can be around these lows if we go all the way down to these price levels. So I do think if we get a good breakout, right, a good breakout with high volume candlesticks, then we could equally just see price dump all the way down to these lows, because we have a solid gap here that could eventually get filled. So something to pay attention to. But all this depends on what the DXY does this coming weeks, right? So that's it briefly for USD-JPY. If you disagree with me, please leave your thoughts in the comment section down below. I'll do it to check them out. Hopefully, I can learn from your opinions. And lastly, we're talking about the DXY. So the DXY right now is the deciding factor for major currency pairs, right? Even gold to some extent. The reason is because we've just retested this area of resistance. We seem to have had this reversal, right? So this reversal is the reason why you see USD-JPY going down. You see EUR-USD, GBP-USD going up at the moment. So something significant is happening, and there's this is a breaking point for DXY. So what we are expecting right now is, if we get a retest of this trend line, do we get a bounce, right, that eventually takes out this area of resistance, or we get a breakout, bearish breakout in continuation of the bearish move or bearish trend we've had on DXY all this while. So if you take this trend line like this, you can see we are getting close. So if the DXY takes out this trend line, so this area of resistance, so 1, 2, this area of value, if we take out this area of value, also taking out this trend line for an extended price decline, then I expect gold to rally to new highs, right? I expect USD-JPY to go down, EURUSD to go up, GPS to go up. You know how it goes with major currency pairs, right? With DXY being either the quote currency or the base currency. So all eyes right now should be on the DXY, because DXY is going to determine to a great extent what happens in the forex market, especially if you trade, major currency pairs or you trade gold. So for me, my gold position right now is going to be based to a good extent on what the DXY does, because if you check the chart, DXY has been bearish, right? So we've had bearish. This is a 4 hours chart, mind you. So DXY has been bearish for quite some time right now, and what I can see is just a huge consolidation that could see price going further downwards, right? So if this happens to be a bearish move, so a rejection from this area of resistance, and DXY goes down, then expect gold to rally to new highs, expect GBUSD areas to go higher, and USD-JPY in this case to go lower, falling off this cliff, except something significant happens with the JPY and it pushes this pair upwards, right? So that's it briefly for this week's analysis. Something to pay attention to. DXY is going to be my major focus over the coming weeks. Pay attention, take advantage of what you can see on the chart. If you have questions, leave them in the comment section down below. And if you're not part of our community yet, join our Discord community. It's totally free. I have the link in the description below. And lastly, if you haven't checked out our complete chart pattern playbook, check that out. It's totally free. Use the link in the description below to get a copy. That's it from me, guys. See you next week.